Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Wednesday. Still kind of been a quiet week, and yesterday did end up kind of playing out the way that we anticipated, but I'm seeing some pressure in the Treasuries. We're below 111 here. So not necessarily a good look for Treasury. Let's look at kind of where we're at and discuss what's been going on. So here you got the Treasuries, and man, oh man. Okay, well, look, there was a little bit of, well, I guess yesterday it was mostly just flat, and a little bit of it came back after. But here you can see the pressure coming back. Man, I tell you what, when you look at it on the longer term chart, sure is a downtrend, doesn't it? S&P 500, quite a bit of noise because of like trade deals and everything. So this is another one where I'm seeing a lot of narratives being pushed out there about what's going on in the market that I really do not think matches up with the flows. Not at all. So like, yes, there was a little bit of headline news about tariffs and everything, but that was mostly just official announcements of things that they were already warning us about last week. And this has been something I continually see is Besant will say, well, we're talking about doing X because we need, you know, like we're talking about pushing the date back because we need more time to negotiate. And then when they actually make them official, they send the letters out. Everybody's like, oh, the market's reacting to that. When it's like, no, we already knew. We already knew. I think we got a quiet week here with no major economic news until the CPI next week. Markets is kind of going sideways and doing its thing. And the only reason I bring that up, let me come back over here really quick. The only reason I'm harping on that is because a lot of people are obsessed with the, you know, Trump always chickens out trade. And, you know, eventually that's going to fail hard. Eventually that trade is going to fail hard. If we get to that August deadline without trade deals, or they're at least very, very close, I think that they'll ramp things up and it could get ugly again. I'm particularly concerned about Japan because with Japan, they've got 25% tariff on Japanese vehicles is what they want. And that is just a non-starter for Japan. So if the administration isn't willing to move on that, that could be one where it could cause some real chaos. And if you start causing chaos with the yen, then it starts to mess up with interest rates, and then the whole market becomes a mess. So that's one risk that's very real, and I wouldn't just dismiss, okay? Oil going a little bit higher. It seems like that OPEC has things under control and is keeping the price where they want. I am seeing some rumblings of that they want to increase output and crush the price of oil to hurt Shell, but I don't know if that would really do anything. So yeah, it's been a while, but just a little bit to the upside. Oh, I didn't even have the screen up. A little bit to the upside here today. Gold and silver are languishing a little bit with the Treasuries. And you know, the dollar has moved today too. So dollar is weakened a little bit, as you'll see here in a second. Copper. Okay, so they announced some tariff changes on copper, and copper just shot the good grief. Okay, like 70 cents, 90 cents at the peak. in copper is a bonkers move. I don't know if I've seen anything even remotely close to that. So that's a little wild. We'll see where that goes. And then here you can see the dollar. Well, the dollar was, I was reading that the dollar was under pressure, and I guess it was a little bit under pressure early in the session, but it looks like the dollar hasn't really done much. And you can see here the Japanese yen stabilizing, so it's not quite the same story as in the Treasury, is it? I mean, they're still similar. They're still similar, but you can kind of see where maybe the yen kind of looks like it could be turning around. Whereas in ZN, I'm just kind of like, no, this is going down. Right? I don't know. They're correlated. This is one of those things where, I don't know, a lot of people, chartists, they kind of are like, well, you want to look at the multiple things and see them together. But I see it as like, well, this one looks like it's turning around. This one that's supposedly completely correlated does not look like it's turning around. Or the vice versa. This one looks like it's turning around. This one doesn't. That just means I'm just seeing things. Okay, Bitcoin hasn't done anything too interesting over the night. Just still right there at 109. Say that the treasuries want to move up. Well, they while I was talking, they came across the other side of the range. Not too much of a change in the not too much of a change in the flow, though. Still kind of overall down to this in the session and a little bit flat. I am seeing here on the market order imbalance, though, a lot of back and forth. It is hitting like those might hit the 53% level and try and go long. So that's curious. So let's see here. Yesterday, we left it going. I don't know how it did. Now, it says that it's realized $10. But it actually took another trade later. Is that right? Yeah, here's the one that we were looking at. The one that we were looking at, it basically scratched. And then 30 minutes later, it took another one that only ended up being one tick. Okay. Well, that's not as bad as I would have thought it could have done. So that's not bad. My pocket is buzzing off the hick. Okay, let's see here. Amir, if dollar and oil have correction, Zian wants to move up. If the dollar and oil have correction. Well, I am seeing some selling in oil. That might help treasuries a little bit. I tell you what, the correlation between oil and treasuries is probably the most correlated, is probably the most complicated. Like, I don't see it matter every day. I don't, it's something that kind of comes in every once in a while. And when it happens, it usually feels a little confusing, but the price of oil does materially impact interest rates. I do have to wonder that change in copper, that's pretty significant. Copper is an input to a lot of things. That could have a much larger impact on the rest of the market than I think a lot of investors would expect. So that might be a good place to look for an edge. I don't know. I think that the play there would be expect inflation to be a little bit higher and ergo be short interest rates. But I still think that they're going to cut in September. Actually, we should go and look and see what the market is pricing out, because they were pricing it out at 70, but the probabilities of that happening may have decreased. We'll see. Okay. Navarro is speaking, and he just said Apple thinks it's too big to tariff.
Order submitted.
That let's see if the market is moving on that. Let's see if we can come over here and look at Apple futures. Not futures, but it's actually that's funny that there is Apple futures. Okay. Oh, yes, they're taking a hit. Look at that. Already down almost $1. Okay. And I will note that we crossed the 53% flesh thresholds and the robot took along. Navarro saying they should cut rates in July. Futures, I don't think, are really reacting to that, though. Okay, so here's July. Current target rate is 4.25 to 4.5. They are still saying no cut in July. September. Okay, so it has changed. It was before, it was 70%. Let's put the compare on here. Yeah. So at one point it was 70% in the past week. So this was yesterday. Yesterday it was 60%. So yeah, in the past week, the probability has changed by about 10%. Which to me is a pretty big change and makes me doubt whether it's going to happen. These probabilities are pretty good, do a pretty good job of telling you, okay, they're going to cut or not cut at the next meeting. But like when things are changing, these can be a little bit slow and like it changes really quickly. So I think copper is because of CPI. No. There was a tariff change. So the United States is implementing. Well, let's come and look at it. Let's find the exact. Okay, Trump says he will impose 50% tariff on copper imports. That's why the price of copper in the United States is just really shooting up. Yeah, Trump also said he would soon announce tariffs at a very, very high rate, like 200% on pharmaceutical imports. That one, I am a little bit like, okay. Like, because wouldn't that just spike everybody's pharmaceutical costs? Like, essentially double the cost of all prescription medications overnight? I don't know if you can actually do that one. I understand why he would want to do it, but I don't think that one is very practical. Here, Apple going for a new. Let's just leave Apple up right there. I'm finding this one riveting. RxGeo says, especially the generics, which are considered to be cheap. If only our medications weren't 10 times higher in the first place. Yeah, how do you think? So, okay, so here's something that's been going on in the political sphere that we haven't really talked about that I think is very, very interesting. And perhaps it gives us some hints into how some of these things might go. So the Make America Great Again world, the MAGA world, is really upset that they think Donald Trump is going to implement amnesty of some sort. Amnesty being that people that are here illegally are basically rewarded for being here illegally and allowed to stay. And that has always been the concern because that will encourage more people to cross the border illegally, right? Cool. So the MAGA world, they want all of the immigrant labor to leave, essentially. They want illegal immigration to stop and the illegal immigrant labor to leave, which would be a problem for farmers and in the agriculture, because they're very much relying on that super, super cheap source of labor for their current prices. So if you really were able to like totally just absolutely, and I mean, I kind of do feel like to some extent they are kind of doing this, like people are not crossing the border anymore. A lot of people that are here illegally are leaving on their own. It's enough that it is having an impact on people, which is probably why they're talking about doing this. So what do? Because, if the cost of labor in the agriculture industry goes up steadily over the next 10 years, like that's going to be some major changes to our economy, but, we adjust and we figure it out. But if that change happens all of a sudden, all at once, and within 1 month, that just absolutely destroys the farming industry, right? So what do you do about it? And so Donald Trump is proposing a guest worker program. And you know what? He's always kind of said that this sort of a thing is a possibility. And I have always suspected that after Donald Trump feels like that he has the border under control, that he would do an amnesty of some sort, that he would say, okay, now the border is secure. We're not concerned about so many people coming in, but we can't necessarily get all of the people that are already here out. So let's deal with them. And then you would create a pathway to citizenship for them. He's said a couple of things in the debates that are kind of like, well, you might be surprised. Except, really seems to me that it's like once we have the border under control, there's lots of things that we might do. I try to keep myself separate from it. I don't want to be too affected by the politics, but this is a thing that people are talking about, right? And so I think that you're probably going to see this in a great many places where we come in and we want to make a change. And so we're going to come in and hack and slash right at the beginning. And then all of the impacts of it, get brought to the front. You might not necessarily see them, but the people that are there are going to say, well, because of this, we're going to do this, or it's going to affect us this way. Once you kind of see all of those impacts, then you try and contain the damage. And the way that they're trying to contain the damage in this case is a guest worker program, right? So the problem with the pharmaceutical industry, though, is I'm not sure how you would contain the damage with that one. I think that you might just have some real problems with the supply of price and supply of pharmaceuticals that would really cause some problems. I guess what you could do is you could say, okay, the tariff is 10%, and slowly ramp it up over time. Let's see here. Having lived in a farming area all my life in Illinois in the heartland, illegals aren't helping a single farm at all. It's all the solar fields and fiber installation. Really? So when I was in Missouri, Kansas and Missouri, and granted, I wasn't there forever, but for the last 3 months or so, I was definitely out in the boonies. And we didn't have a whole lot to do, so we helped people on their farms a lot. And my observation was most of it was family owned. Most of it was family. But there was a lot of illegal immigrant labor. One of the places in that area that was there was like a butcher's factory there. So it was like they had the whole thing. One person would cut the chicken's head off, the next person would do this, the next person would do this. They had the whole thing set up. I'm thinking though, Paul, it depends on the place. I think that maybe that is true for you guys in Illinois, but I bet you it's not the same thing in Texas, right? Because everything that I hear about Texas is that the rural areas are just absolutely flooded with illegal immigrants. Every country should follow Poland as an example. Well, that would have been nice. Maybe it would have been nice if they had done that from the beginning, but the issue now is that nobody did that, and now you kind of have a situation that you have to deal with. I don't know how, and you can't necessarily just cut it back without there being short-term negative side effects. Most farmers will barely hire people in the first place. That's the whole point of big old tractors. Just need a guy and a son to drive it. Yeah. Depends on the food type too. You brought up meat. We are in the heartland. We grow everything you want on the ground. That makes sense. It would be interesting to see the breakdown of like what kind of a job they have. What would be the term for this? I don't think that you could just say occupation. But like illegal immigrant labor by occupation, perhaps. Let's see if we can find some stats like that. Illegal immigrant labor by occupation. Undocumented immigrants constitute a substantial portion of the agricultural workforce, particularly in roles involving field and crop work. They account for 25% of all farm workers in the U.S. Okay, so maybe it's just that APOL is thinking, oh, you know, that it would be 80%, but maybe it's only 25%. That sounds more reasonable. Construction, that's definitely true. A significant number of undocumented immigrants work in the construction industry. They make up a substantial share of the workforce in this sector, particularly in occupations like construction labor, drywall installation, roofing, and painting. Service, building, but do they have it by like percent? Like what percentage of them? Oh, maybe this right here. Come on, show me the picture. Oh, it's not showing me the picture. Yeah. Well, these guys were mostly just saying what illegal immigrants do and what U.S.-born workers do are very different. That's why houses no. It's because they just are changing the materials that they're making them out of. Got another uptick there. I really don't think that that's fair. You know, you know, like one of the things that's kind of difficult here in this kind of conversation is that you don't want to paint with too broad of a strokes. But there can definitely be trends and certain things about the way that illegal immigrant labor is going that you can see the impacts of, or that you might be able to use in your business, you know? But it's kind of hard to know for sure. A lot of the statistics and stuff that you might want to use for that sort of a thing aren't going to be available because it's difficult to pull that population, and people probably be afraid of doing it for fear of being called racist, right? My own observation has been that South American workers work very, very hard, but that they don't necessarily focus on quality work. I don't know if that's... I doubt that that's a cultural value and is probably more a factor of the type of work that they're doing. But there's definitely a narrative that I see out there that people say that we don't build... the houses that we make aren't as solid anymore. I personally don't think that that's because it's being done by illegal immigrants. But I really think it's that we're trying to cut costs everywhere. Trying to cut costs everywhere. And some of the houses, I'm telling you what, man, if you don't buy the house with like the extra insulation add-on package, it really is like cardboard walls sometimes. I saw a lot of American construction guys talking about the fast work aliens do, especially on framing. To get rid of the illegals who will grow our field food, all of our food struggles will be blamed on the illegals getting deported when we are having big issues as a whole country in food development. Is that really true though? It kind of seems to me that the United States can produce more food than it needs, and that we're still kind of telling people to not grow. Otherwise, the cost of food would go down too much and nobody could make money from it. But let's talk construction, though. I think that construction is the place where everywhere I see illegal immigrant labor in construction and forget the whole thing about whether it's quality or not, because we really don't have data to back that up, right? If we reduce the amount of illegal immigrant labor that we have in the United States, that is not going to help us bring the cost of housing down, is it? It's not. Unless you have a guest worker program. Okay. It's not like it's a simple thing. Framing is literally the core of American house. You know what? Like, framing is, I think, something deceptively complicated, right? Like, putting a couple of 2x4s together to make a wall on its face doesn't seem too complicated. But there are small little rules here and there that, if you screw up, matter big time, don't they? And if you do a poor job of it, you get a crooked wall. So anyways, I am of the opinion, personally, it seems a little bit, how do I say this? It seems a little bit unnecessary to me to say that we can't run an effective economy. We can't run an effective economy without having some sort of slave labor at our fingertips. That's, I just don't believe that. Sure, having cheap labor is really favorable to a certain class of people, but I really think that systems are flexible, they adjust, and that for a long time we didn't have that in this country and we were just fine, right? It used to be teenagers would do these jobs. Now teenagers don't work at all, right? So I don't agree with this assertion from the left that we have to have slave labor to be able to run the economy. The problem is that we are essentially using slave labor to run the economy right now. And so if you just get rid of it all at once, that has a certain negative impact that you have to deal with. So having a guest worker program that you slowly ramp down over time, that, you know, and I'm not necessarily saying that that's what I would want to do or like that's the best solution to it. Only that that's the solution that's being proposed right now seems to make sense. Just screw some wood together. It's not airtight, keeping more, well, but first of all, you don't screw them together. You use nails in framing, don't you? You use nails in framing because really what you're trying to protect against is the shear force. And if you're trying to keep them tight together like this, it doesn't actually give the frame enough room to breathe. PayPal says correct. See, I know my wood. I'm not a carpenter, but I'm a woodworker. So I haven't done much woodworking the past 6 months, unfortunately. I have to say though, I'm making this dog kennel, and it's a cabinet, and I've been like painting primer on it and then sanding it, and it's getting really nice looking. Although like I kind of think that I need like $1,000 paint sprayer to really finish it up correct. Or maybe I can find somebody that has that paint sprayer. I should recenter up here. Oops. Oh, that was the wrong button. There we go. Let's double check on Apple here. They were pushing a little bit lower here, but it looks like they have kind of stopped themselves for now we'll double check. We'll check back in on them when S&P 500 starts up. Don't let me forget. Oh, yes. Also, I should mention while I'm thinking about it right now, tomorrow stream is going to be very, very short because I have a dentist appointment super early. Like, we'll do the first 30 minutes and that'll be it tomorrow. Okay. What volume profile indicator do you use for NinjaTrader? Oh yeah, like this one? Well, I don't know. That on this chart it looks neater because treasuries don't move very much. If we move over to the S&P 500, it's a little bit more messy. But I am using CAMS. I don't know if you can see the text there. CAMS VP R2. G asks, have you tried trading the treasuries during the London session? So I personally have not, because I can't wake up that early. But one of my mentors, John Bottomley, may he rest in peace, he would trade the open of the London session. Now, he started as treasuries. Kind of what happened with him. I tell you what, man, it's interesting because he was basically a chart trader, but he had some big success, and it was largely a factor of, I think that he understood the market really, really well and knew where to go for opportunities, in a way that he didn't even consciously realize. And so he would probably tell you that it was all from his reading of the volume profile and things like that. But I really don't think that that's where his success came from. But one of the things that he had caught on to when he before he died, that was working really, really well for him, was trading the London session, but the S&P 500 futures. Because what happens is a large portion, you can go back. I don't know where I would find these charts now. Used to be something people talked about a lot before COVID, but like a very large portion of the gains in the S&P 500 actually happen overnight. And when the London session starts trading, there tends to be a decent amount of trend that forms there. And so he was basically just trading the trend in the London session and was doing pretty good with it. So if I was going to trade the London session, I might be more interested in the equity indexes. But there definitely are moves in the treasuries as well, aren't there? Would be changing from the treasuries to the S a big... Oh, yes. They're completely different, man. I tell you what. They're completely different. I mean, I would rather trade the treasuries because I think that your ability to form an informational edge in treasuries is greater than almost any other instrument. The amount of opportunities and things that there are to know and the availability of that information, like your ability as a retail trader to get access to that information, is much greater in the treasury market than it is in any other market. So I would always prefer to trade the treasuries. But the treasuries are much more active once the pit session in the United States starts, because the treasuries are such an important part of the global system. Whereas for stocks, a lot of stocks are hosted in London. Okay, understand. Of course, the US leads the way because it has the most corporations, but there are a lot of really important companies that are hosted on the London Exchange. A lot of money comes through London, and so you definitely get trends at the start of that session. How can one start learning about trading treasuries? So I have a few videos on this channel that kind of give you a primer. I think a lot of those videos are kind of give you some of the same things. So there's one where I talk specifically about trading micro treasury yield futures, which would be a really good one to watch because that kind of gives you the beginnings of like how what's the deal with the prices, you know, why are the prices weird, things like that. And then I have one about trading the Federal Reserve that really gives you a good idea of like the news cycle with the treasuries and stuff like that. And then beyond that, it's just experience, unfortunately. Someday I would really like to write a book. I kind of already started to some extent because we were talking about doing like a webinar series, a paid webinar series. I don't think that there was enough interest in the webinar series to do it. But you know, that is kind of turning into the framework for a book. Because there's just so many little details like that about every instrument, really, about how that industry works, that I have never really seen anywhere. Like, not in a guide that's like, you know, where somebody would find it and actually learn it. It's stuff that just kind of gets passed from trader to trader. And it needs to be written down, you know? How do you juggle trading the open in your regular job? Well, I don't. So the thing is, it used to be that, especially when I was working from home, most stand-ups in the industry these days start at 9 o'clock my time. And so I was able to trade until 9 o'clock, if not 9:30. And I don't really see a point in trading after 9:30. Like, because 9:30 is when the London exchange closes. So, like, the most active period of the market is between 6:30 and 9:30 my time, which would be like 8:30, 11:30 Eastern time, okay? But the last 3 months, I've been working a contract job where I have to be on site for a job that takes me 45 minutes to drive to. And so I end the stream at 8 o'clock, which only gives me 90 minutes to trade. And on top of that, we've had a pretty testy market. So I haven't done a lot of trading in the last 3 months. So that is one of the things. It really seems to me that to really have success trading, and trading futures in particular, that you really have to be in a certain situation, one that allows you to be able to wake up early and trade before your day job, and you know, you have a real career that gives you enough money to play around with, so that you can lose money trading futures and it not being a devastating thing. And you have to be the type of person that likes to sit at a computer desk, likes to read the news, likes to do quantitative stuff, math analysis, programming, right? It takes a certain kind of person. It's not for everybody. Not for everybody. It's really curious to me, the whole prop firm thing, the amount of people that have popped up trying to do it. Because I really don't think that there's that many people that are actually suitable for it. There's way more people trying to do it than I think people in the population that would actually be suitable for it. Perhaps part of that is because we've taught everybody that you can make money from just looking at a chart. And so everybody says, you know, to themselves, oh, this is because ultimately at the end of the day, everybody's looking for an edge, right? In this economy. How can I make the most money with the least amount of effort? And so day trading appears on its face to be this outlier where you can make insane amounts of money with very little effort. I just have to understand this one pattern and then just trade this one pattern. But it's a lie. It's a lie. The amount of effort that is actually required to be consistently profitable day trading futures is mind-bogglingly insane. Like, that's why practically nobody actually does it long term. You're going to find a lot of people that claim to do well over a period of 1 to 2 years, but I've literally never met a retail trader that had a 5-year history of success. Literally never. Not from day trading, at least. Swing trading, different story. But day trading, never seen it. And I think one of the major factors behind why the failure rate is so high is because we're telling people all you got to do is look at the chart. And I've delved pretty deep into the real empirical research on why markets behave the way that they do. What can we prove about markets and what can we not prove? Especially in the area of order flow, because a lot of the kind of aberrations, things that are different from what would be a random walk that we can prove, a lot of those are visible within order flow. Price tends to just be random, but when you look at order flow, there's more statistical things that you can see. And then we have a lot of research to try and figure out why those things are, and we've been able to explain them with microstructure, kind of like the rules of the game, and with complexity, how small little interactions can lead to emergent behavior at the higher level that you wouldn't expect. And everything that I know about this suggests that you can't just look at a chart. That essentially the game is set up so that it will appear random. And the only way that you can really make effective predictions on intraday timeframes is if you know that somebody else really big is going to buy. So you know a piece of news that's going to move the market before the rest of the market, or you know enough about the way that certain market participants behave that you're able to predict what they're going to do in a way that the rest of the market can't, right? So in order to do that, you have to understand a lot of things about the market. You have to understand what is driving interest rates. You have to understand all of the different economic indicators and how the market reacts to those. You have to understand how businesses are working. What is the labor market doing? What are businesses doing? Like all of these things. And this is a lot of reading news, reading business news and economic articles and economic research, and a lot of really, really dry stuff. And just obsessively researching just so that you can like even stand a chance. And so it actually turns out to be you're investing an insane amount of effort to kind of just get scraps. Really to just kind of get scraps. That's day trading. That's the reality of day trading. Only do it if you absolutely love it. If you just absolutely love the space. Like you're going to go and you're going to read those dry economic articles, research notes, even if you were never going to make money from it because you enjoy reading them. Then maybe day trading is for you. Okay. Now, there's this other group of people that's like, you're super rich. You want to make the most money from it. You're willing to put some effort in. Okay. But you kind of want to get the biggest bang for your buck. Then probably what you should be doing is managing your own momentum portfolio. In my opinion. That's the person that really wants to get involved. Like you're bored and you have the money, right? You're not necessarily going to get a whole lot back from day trading, but you can beat the market with either stock picking or momentum. Hearing you say it like this makes me realize we really are super nerds. That's exactly it, man. That's exactly it, man. Day trading is really for super nerds, and the type of person that I'm seeing pursue this is like the super alpha Chad that wants to come in and take big risks and stuff. So this is another opinion of mine. So, you know, like that you know the type of guy I'm talking about, right? This like 19-year-old kid. They didn't necessarily do the best in school, but they're super ambitious now, right? I think that person should go into private equity, personally. I would like to get more involved in private equity. It sums it up pretty well in simple words for a lot of gurus, at least. Yeah. Well, so there's this other type, right? Because I think that most gurus tend to fall into this place of narcissist, right? Because I kind of feel like there's two major ways in which somebody will be motivated to like make content. One is you're a chronic narcissist. You have to elevate yourself above everybody else and prove to everybody that you're the greatest because you have some sort of fundamental wound that you some wound that afflicted your ego in your youth that now has you completely obsessed about your appearance and appearing better than everybody else. And the other side is being a people pleaser, which I wouldn't consider myself a people pleaser, but I am definitely a person that responds to social praise. You know, that's the thing that gives me the dopamine, to be recognized, called out by name and say, hey, Seth's been doing a good job with this. That definitely gives me the juices, right? And that's probably what drives me to make content. Yeah. I think Fat Cat is somebody with a pretty good track record. So two things. Number one, I've never seen a track record of his. Like, does he have like 5 years? I'm going to bet that his track record is probably pretty similar to my own, which is to say a lot better than like 99% of retail traders, but still just kind of treading water. Right? Yeah, 8 years, but that's not what I meant. I mean, like, you have like an audited track record of 8 years. I don't think he's ever posted any of that. He's been doing it for 8 years. I think that might be right. I thought that I started my channel before his, but it's been 2017, 3 plus 5, 8 years. Yeah. You're not really going to find any streamers before 8 years because before that, YouTube live streaming didn't exist. Twitch streaming, maybe, but not. Yeah, he hasn't audited. Yeah. See, that's the thing, though, G, is like, I'm not going to call out names, okay, but something that a lot of people do is you'll trade on live on stream, and you will pick a strategy and a way of managing your risk that essentially means that you win most of the time. And so anybody that's coming in and watching goes, oh, hey, he's really good. He wins like almost every time. You know, they're going to win like 80% of the time. And then one day they're just going to completely blow it. They're going to take on too much risk. They're going to take a huge loss. They're just going to completely blow it. And they say, well, that was my mistake. I was on tilt or whatever. They blame it on themselves and then they move on. And so what you're not seeing is that actually what their strategy is kind of doing is little win, and then big loss. And they're not actually profitable over the long run. But to the viewers, it appears that they are profitable because the viewers see they're winning most of the time. That's why if we were really going to say somebody is or isn't profitable, we would really have to see like a full history of their trading, you know, in this. And of course, you can limit it down. You could say, for all your trading in this particular instrument, how much did you make or lose? And look at it, right? And then we could maybe say some things about their trading. I've never seen that. I've literally never seen that. Not a 5-year track record. As just the reality of it. And it comes back to the statistics, right? Like, if you take one trade a day and you trade every day for a year, statistically speaking, you have about a 40% chance of coming out profitable in that situation. Okay. So that's why you got a lot of people post on Reddit or wherever, or even they become YouTube gurus. They say, oh, they've been profitable. Yeah, because they did it for like a year or two, and then they stopped having success. And at that point, they don't need to have success anymore because they have the YouTube channel. That happens a lot. Like most YouTube channels, that's where they're at, is they had a period of success that kind of brought all of the people in. And then after that, they just ride the wave of the YouTube channel. What variable does that 40% chance entail? The number of trades that you take. So if you were to take more trades, then that percent will go down over time. Right. So that was the next step of it, okay? Is if you take one trade a day, every day, for 5 years, the chances of you being profitable, and again, these are all random trades, the chances of you being profitable in that situation is something like 5%. And the thing is, most retail traders that are day trading take more than one trade a day, right? Which is why I'm not sure if there actually is an instance out there of a retail day trader with a 5-year record. I haven't seen it. Like a 5-year, like auditable record. I would want to have like every trade that they made, like the entry and exit of them, and then the overarching statistics. Or maybe you could just give me a spreadsheet of every trade and, you know, their MFE, MAE, how much they made on the trade, right? For 5 years, and then I could, you know, I had the information to make the statistics from it. I could look at. Okay. Is that why swing trading has the highest odds? Okay, so I'm not so sure that swing trading necessarily has the highest odds. But the thing is that swing trading is now a completely different game. Hey, that trade worked really, really well. They got the target. And it's still going. In fact, it looks to me like what happened there was stop run past 111. So in other words, I'm okay with it taking its profits there on the set profit. So I don't really have good exit conditions on this robot. It, you know, so it has a take profit. Okay, what was I talking about? Swing trading. Okay, why is swing trading a different game? The thing that is associated with gains the most is holding time. The longer you hold an asset, the more volatility you are exposing yourself to, the more money you tend to make. If you want to make 10 times your money on an individual position, you probably hold that position for many, many years, right? This comes back to, there is a microstructural reason for this. So when you trade, like what just happened here, we had a lot of volume come out, 5K at each level there, very, very quickly through this area, probably because of a stop run. When that happens, it kind of freaks out market makers. market makers don't want to provide as much liquidity there. And so it has a tendency to kind of like cause things to stop moving. So you can see this really clearly on the 10-year chart. How is it? How is it that we have this trend up? Hold on a second. I don't have my pen out. Where's my pen? So I can highlight it for you. How does it make sense? You're having this trend up. Really good trend up. And then all of a sudden it just stops dead. How does that happen? We have a good trend and then all of a sudden, what the heck? Literally doesn't move at all. What that right there is just them going back and forth across the same price. For a really long time in this instance too, like 30 minutes. Really good trend, 30 minutes, nothing happens, then the trend continues. How does that happen? How could it be? They're so excited, everybody's getting, and then it just goes sideways? It's because the market makers stop providing liquidity. So you get this situation where there's literally no liquidity here. There's too much liquidity here and there's too much liquidity here. So it just goes back and forth. Okay. This is what causes something that we call the square root law, which is, let me move my pad down here so that I can actually write it here for you. Oh, we should come over here and I'll write it. Okay, which is the impact. Oh, let's make it bigger. The impact of an order of size Q is equal to a scalar y specific to the instrument times the volatility of the instrument times the square root of the size of the order over the amount of volume traded in the time. And if you graph that out, it looks like this. So you might notice when you're having a move, we always draw it like this, right? It's actually, if you really look at a large enough instrument, you'll actually see that it curves. Like this. You'll also tend to find that the size of this move is bigger than the size of this move. Do you see that? Come back over to this chart. Right, we had a big move up. First leg came back. Now we get this second leg. Not as big. Right? That's the square root law. So what that means is there's kind of like a speed limit built into the market that is a real limit on how far an asset will move in a day. Now there is a point on the square root law where it goes like this and then it goes whoop, and that's like when the market goes super crazy. Okay. That's when we're having like 2008 financial crisis type of stuff. Okay. But generally speaking, there's this upper limit on how far an instrument can go in a day. And so when you're looking at risk reward profiles, right? So I can come in and I can say, I want my winners to be 2 times my losers or 3 times my losers. Well, that ratio can only get so high in a day. And it tends to be practically around 10. That is, there are strategies you can run where your winners are 10 times your losers, but you only win like 10% of the time. And that's break even, and that works out, right? But if you are able to hold for multiple days, so that now that square root law, that upper limit on how far an instrument can move in a day, you hold multiple days, now all of a sudden you can run into these situations where you can make literally 100 times your average loser. And That's how momentum works. Okay. So anytime that you hear somebody say they're trading momentum and they're day trading, they don't know what they're talking about. They don't know what they're talking about. Momentum is a portfolio strategy, a swing strategy. In my definition of swing trading, and that's based on the historical, like how these strategies actually work. And that's the other thing, is you can't really swing trade a single instrument because you're relying on momentum. Not every instrument is always exhibiting momentum. So what you actually have to do is monitor a universe of assets so that there's always something within that bucket that is trending and not trending. It's always something trending up, always something trending down, and whatever, right? Then momentum works. Now, that doesn't necessarily mean that it's easy or it's a free lunch, okay? But that is all of these really big fund managers and stuff like that. That's how so many of these start and work, is momentum strategies. And there's a lot of risk to a momentum strategy. So in a stock, typically, you will get like pullbacks of maybe 10%. Like if you have a really good portfolio stock picking, you might lose 10%. Or in a really bad situation, like a 2008 crisis kind of situation, sometimes you can get 50% declines, right? And that's kind of like the amount of risk that you're taking with buy and hold. When you are swing trading, drawdowns of 20 to 50% per year are extremely common. But you do so well, especially when volatility comes into the markets, you make so much on those that it makes up for it. And so you, in the end, make more. And because you make so much more, you get a very high Sharpe ratio as well. That's how momentum works. So if you want to beat the market, swing momentum portfolio is probably like the most accessible way of doing that. And there's all sorts of things like, analyzing your portfolio for correlations, things that you can do with machine learning. So there's a lot of quant stuff that you can do with it. But then there's also a lot of, okay, this thing is in momentum, but why is it in momentum? What are the flows that are driving this thing? What are the risks with that? And knowing enough about that particular market to say, well, I did just get a signal, but I don't actually want to take that one. I don't actually want to take that one. That's in the cocoa market, and I know that the cocoa market is actually probably about to go down. I think, right? And then you could build a real edge and beat the market 100% for sure. The other one is you can pick stocks, and if you have a portfolio of 5 to 10 stocks, and even one of those ends up being a 20 bagger, you outperform the market. So there are ways to outperform the market if you really know what you're doing. But day trading is probably not one of them. The day trading is, I think that the origin of this, like where this really became popularized was, well, first in the 80s, you had the floor traders that were day trading essentially. And then when things went electronic, for the first few years of when things went electronic, there was a lot of people making money from day trading on the electronic. And when you're doing that, you're providing liquidity. So that's actually like the exact opposite. That's one where you're making a little bit, and every once in a while, there's a possibility where you can take a big hit. And you basically have to be good enough to know when that situation is happening and everything to avoid that big hit, right? And that's how market making works. And market making, you don't beat the index. That is the exact opposite. That's almost like taking the risk-free rate of return. Basically, I want to make enough money to be able to live off of it every month. Once I kind of put it in that terms, like the whole idea of like making a living from day trading is kind of dumb. But okay, so that's why now with swing traders, because you hold for multiple days and because most stocks go up, as long as you're mostly buying, most swing traders will make money. Whether or not they will outperform the index on a risk-adjusted basis is a different question. Most don't. But hey, you don't necessarily have to beat it for, you know, because part of it might be you just want to be involved. If you're having fun and you made money, I think you're winning. Wow. You're up 1,200 on your prop account? Good job, A-Paul. That's the way to do it, man. And you have the consistency rule, but you've only made 30% of it, so you're on a good track. And especially when you have the big win at the beginning, right? That really helps. Andre saying, but they had a real edge against the lazy market. Yeah, so the guys that were making money like in the early 2000s, like from 1999 to 2008-ish, those guys were basically taking advantage of markets had become electronic, but electronic trading robots had not become so prominent yet. After the 2008 crisis, the algorithmic traders really, really ramped up, and the opportunities to really make money as a market makers kind of disappeared. So now, if you want to day trade, probably the most, I don't know. To me, I think that the best strategy that you're going to get trying to do a day trading strategy now is, instead of market making, being an informed trader. Know stuff about the market, know things about the news, and be able to get into positions before the crowd comes in. Being able to predict what the crowd is going to do. And in that respect, those opportunities tend to come from information that you know about the market and how different participants in the market behave, and not from a chart. Not even from order flow. Order flow is a very, very good companion to informed trading, because order flow allows you to understand what's going on right now and to verify if your theory about what's going to happen is actually correct. But on its own, order flow, on its own, the things that we know and are proven about order flow, the predictive signals that you can get in order flow, are very, very short-term, and probably too short-term for humans to take advantage of. So that's why it's kind of a supplement to informed trading. Now, I think we brought this up because we were talking about Fat Cat. My understanding of what Fat Cat does is that he understands. I was talking about those liquidity holes where it's just going up. It's going up and then it just goes sideways, right? Well, on a less liquid instrument, it'll come back, right? And I think that Fat Cat is identifying those. I'm very skeptical that you can consistently do that in the S&P 500 and really be super successful with it, because there's just so much randomness over there. But I don't know, man. I never really had a problem with Fat Cat. Just, it was always like, lots of people would say they like him, and then I would go and watch his videos, and I'm like, I don't understand what you guys like about him, because it's like a 2-hour monologue over information that could probably be provided in like 2 minutes. But then he started saying things about order flow that were just said to me that he didn't really understand what he was talking about. A lot of misunderstandings about what you're actually doing and what they actually do, and all of these sorts of things. Kind of, it seems like he seems like an okay guy, but I just don't really think he knows that much about order flow, to be honest with you. Now, interestingly enough, something that I'm seeing happen, and I'm kind of wondering if I am doing the right thing here, Like I have just not had any time to make videos. I'm making a video about this KVM switch because these guys that I've gotten KVM switches from before, TE Smart, they have high refresh rate KVM switches now, which is very, very nice. So I'm making a video about that, and I need to get that one out. I'm hoping to get that one out this week. But I haven't had any time to make other videos. And it's starting to pain me now, because something that I see like almost every day now is, hey, I came in, I started doing ICT, but everybody says that sucks. And so now I'm thinking about doing order flow. It's great. It's like our moment is here, maybe. Except for that I'm not making a ton of content. I don't know if YouTube is really sending people to my channel. And I really, really strongly believe that we have knowledge and insights about order flow that other people don't. Because most of what you see taught out there as order flow is kind of a retail trader understanding of it, where like information gets passed from person to person, and I tried this and it seemed to work. And so a lot of people teach order flow as technical analysis applied to order flow is what they really mean by order flow. And what we do here on the channel is, first we explain the data that we're actually talking about, so you can understand what you're looking at and the sorts of things that you tend to see, and then the empirical information. Once you know enough to understand the empirical information, then we explain the empirical information. And nobody else has that for some reason. So I think that it would be, we really want, if people are going to learn order flow, I want them to learn from me. I want them to watch our order flow video series. Because I think other creators are giving people incorrect misconceptions about order flow, Yeah, nobody is talking about empirical research like you're doing on your live stream. Yeah, it's just, it's crazy. It's crazy when you think about it, but I often think about, is that intentional or just kind of the way that things turn out? Because the research is out there. I found it. I never would have stumbled onto it on my own. I had been given breadcrumbs all over the place, and then once I had kind of made the breakthrough, and then it's all right there in front of you. Why don't retail traders talk about this? Is it because it's too complicated and retail traders are too focused on other things that they're just never going to get into that research? Or is it intentional? Is it that we really don't want retail traders to know about these things, and they're intentionally led off the course? I wonder about that a lot. It's because we're nerds willing to find and read the research in the first place. Why would you read any books when you need more time on the charts drawing? Yes. So yeah, so this is something that's been on my mind for the past week, is like, oh man, now it seems like order flow is the next kind of wave of things. Like straight up, I think that ICT is burned out. Like, he'll probably always be a relatively large YouTube channel, and he'll be around there, but he's not like the top creator in the space. And people are searching for a new top creator in the day trading space. And I think that the next person is going to be an order flow educator. And it should be me, and probably won't be. Doesn't that suck? And I don't know what to do about it. I think it's because they cannot get all of the info in a video and they actually have to read. Oh, that may be, like, I think that the videos that I've done, because obviously the videos that I have don't have all of the information for sure, because you're right. You can't take everything that's in a huge thick book and turn it into a 30-minute video. You just can't. But I think we've done a very good job of distilling all of the information down into the pieces of information that really matter the most for retail traders and understanding the end implications without having to go into all of the science about how we know that and how we came to understand that. That if you want that part, you go and read the books, you know? But my order flow video series, I really think that it's a really good series. It's one of those things where like it's really hard when you start into it to see the vision. Okay? But trust me, you watch all of those videos, you're going to understand the market in a way that most retail traders don't. And it will literally turn you from being constantly confused and shocked about what's going on to feeling like, well, I might not always be able to predict it, but at least I understand what's going on. And you will literally feel like you see the matrix. There's a lot of information that you need to know to get there. Is this order flow live? Yes. Yes, it is live. So I'm using Jigsaw and Rhythmic Data to show this to you. And this is, yep. Never seen anyone stream like this. Yeah, well, I mean, I'm trading treasuries, right? So, because there are streams, I've seen people that they have a DOM of the S&P 500 up, but they just have that, right? But you usually don't see people with as many depth of markets as me. Part of that is because I'm trading the treasuries. Yeah, there you go. Once I get funded, you can make a video how I help the viewer get funded and make there you go. I mean, you would not be the first one, right? We've definitely had, I can think of at least 3 other people that were funded, and for quite some time too. So but I don't know if the getting funded is necessarily because of everything that I've taught as much as it is you guys understand the game that's being played with the with the funded trader programs, and are trading a strategy that gives you a good chance of being able to pass it. And then it's just a matter of doing it enough times, you know? Because ultimately, in my mind, the ultimate test is, can you do it for 5 years and have like 5 winning years in a row from day trading? That to me is the ultimate test. That's the standard I'm holding myself to. You're probably not going to see me crow too much unless I can show you 5 years of profits. And I've been able to pull together winning years, but not 5 winning years. And I keep experiencing setbacks, things that like, well, sometimes it was just me making really, really terrible mistakes and getting it wrong. And that's one of the things is like, well, you can be really, really great, but to put together a track record of 5 years, you have to be almost perfect, you know? But then the other thing has just been things like we got laid off and things like that. So that's kind of set us back. Talking about stacking downs, I don't think I like Edge Pro X as much. It's just not as customizable as I was hoping. Yeah, that's kind of what I felt like Edge Pro X had a lot of things going for it and was a good platform. But ultimately I haven't seen anything that comes even remotely close to being as slick as Jigsaw. You know, Sierra Charts has all of the features, but is just kind of like a jumbled mess held together by tape. But oh man, I'm totally over. Like, well, only 2 minutes over, but it's time for me to get going. Right. Statistically trading the way you are saying, what are the odds of success over 5 years? I think that the way they were trading, the odds, well, okay, of randomly having success in 5 years, like less than 5%. Having success over 5 years, like really knowing what you're doing and really having edge, then it depends on the degree of your edge. If you're truly informed, like if we had the information that banks have every time, I think you would win every time. But with the information that's available to us, I don't know. I would venture to guess that it's still below 50% at the very least. Okay, anyways, I got to get going. I will see you guys tomorrow. Stay